A trader sits quietly in front of his screen. The room is dim. Only the glow of the charts lights his face. He has been watching the market for hours. Finally, the setup appears. Everything lines up perfectly. Support is holding, momentum is building, the pattern is clear. This is the trade he has been waiting for. He studies the chart one more time. Every part of his analysis tells the same story. The market should go up. So, he enters the trade, calm, confident, certain. For a moment, nothing happens. The candles move slowly. Then suddenly, a sharp red candle appears. It drops fast. His stop loss is hit within seconds. The trade is over. He stares at the screen, confused. How did that happen? Everything looked perfect. The analysis was correct. The setup was clean. So why did the market move the other way? And this is the moment where many traders begin to struggle, because deep down, they believed something dangerous. They believed their analysis meant certainty. They believed the market was supposed to behave according to their expectations. But the market does not operate on your expectations. It operates on uncertainty. There are millions of traders participating in the market at the same time. Banks, institutions, algorithms, retail traders, each one making decisions for different reasons, each one entering and exiting positions, each one reacting to different information. Because of this, the market is not controlled by a single idea or a single analysis. It is the result of countless decisions happening simultaneously. That means something very important. At any moment, anything can happen. This idea is difficult for many traders to truly accept, not intellectually, but emotionally. Because traders want certainty. They want to believe that if their analysis is correct, the trade must work. They want to believe that a perfect setup guarantees a perfect result. But trading does not reward certainty. It rewards acceptance of uncertainty. This is one of the most powerful lessons taught in Trading in the Zone by Mark Douglas. The moment a trader accepts that anything can happen, their relationship with the market begins to change. Before this realization, every trade feels like a prediction. The trader tries to prove they are right. They watch every tick of the chart. They react emotionally when the market moves against them. If the trade goes slightly negative, fear appears. If the trade goes slightly positive, greed appears. Their emotions rise and fall with every candle. But when a trader truly understands that anything can happen, something powerful shifts. They stop trying to control the market. They stop expecting the market to behave according to their analysis. Instead, they focus on something else: preparation, risk management, execution. They enter trades knowing that the outcome is uncertain. And because of this acceptance, they are not shocked when a trade loses. They are not angry. They are not frustrated. They are not emotionally shaken. They simply move on to the next opportunity because they understand something many traders never realize. A losing trade does not mean the analysis was wrong. It simply means the probabilities did not play out this time. Think about a professional poker player. A poker player may hold a strong hand. Based on probability, the odds are in their favor, but the outcome of the hand is still uncertain. Another player might draw the perfect card. The professional poker player does not panic when this happens. They do not slam the table in anger. They do not abandon their strategy, because they understand the nature of probability. They understand that anything can happen in a single hand. Trading works exactly the same way. Your strategy might have an edge. It might win more times than it loses, but that does not mean every individual trade must win. There will always be randomness. There will always be unexpected movements. There will always be moments when the market does something completely different from what you expected. And when traders fail to accept this reality, they begin to make emotional decisions. They move their stop loss. They close trades early. They double their position size trying to recover losses. They revenge trade. They overtrade. All because they are reacting to something they never accepted in the first place: uncertainty. But the traders who survive in the long term are the ones who embrace uncertainty. They understand that the market is not predictable in the short term. They understand that outcomes are distributed across many trades. They stop focusing on being right, and they start focusing on executing their edge consistently. When this mindset becomes real, trading becomes much calmer. The pressure disappears. The need to predict disappears. The fear of losing trades becomes smaller, because the trader already accepted something powerful before the trade even began. Anything can happen. And because anything can happen, the trader protects themselves. They use stop losses. They control position size. They manage risk carefully. Not because they are pessimistic, but because they are realistic. They respect the unpredictable nature of the market, and that respect becomes their greatest protection. The market has a way of humbling anyone who believes they have certainty. The moment a trader becomes too confident, the market reminds them how unpredictable it can be. A sudden news event, a large institutional order, a shift in market sentiment. Within seconds, the direction changes, and traders who believed they had certainty suddenly face reality. This is why humility is such an important quality in trading. The professional trader never assumes the market must behave in a certain way. They never believe they are in control. They simply participate. They observe. They execute their system, and they accept whatever outcome follows. Because their confidence does not come from predicting the market, it comes from trusting their process. They know that over time, their edge will reveal itself, not because they can predict every move, but because they consistently apply their strategy across many trades. This is the mindset shift that separates amateurs from professionals. Amateurs try to eliminate uncertainty. Professionals learn to operate within it. Amateurs demand certainty before taking action. Professionals accept uncertainty and manage risk. Amateurs take losses personally. Professionals see losses as part of the distribution. And over time, this difference in mindset produces completely different results. Because the market does not reward prediction, it rewards discipline. It rewards patience. It rewards emotional control. And those qualities only appear when a trader truly accepts that the market is unpredictable. The moment you understand that anything can happen, you stop fighting the nature of the market. You stop demanding control over something that cannot be controlled, and instead, you begin to develop the qualities that actually lead to long-term success: calmness, patience, discipline, consistency. And slowly, trade by trade, something begins to change. You stop reacting emotionally to every candle. You stop feeling shocked when trades lose. You stop chasing the market because you already know the truth that every professional trader eventually learns. In the market, anything can happen.
But accepting that anything can happen is not just an idea. It is a mental transformation. Because even when traders hear this concept, many of them still behave as if certainty exists. They say they understand uncertainty, but when the market moves against them, their actions reveal the truth. They hesitate, they panic, they move their stop loss, they close trades early, they search for reasons why the market should go in their direction. And that word "should" reveals everything. The market does not move based on what it should do. It moves based on the constant interaction between buyers and sellers. Millions of decisions happening every second, and no single trader can control that. Not even the largest institutions can fully control it. This is why the market is one of the purest environments of uncertainty that exists. And yet, many traders enter this environment expecting certainty. They believe that if they study long enough, analyze enough charts, or find the perfect strategy, they will finally be able to predict the market consistently. But prediction is not the real goal. Participation is. Professional traders do not enter the market because they know what will happen next. They enter the market because they recognize a situation where the probabilities are slightly in their favor. That's it. Nothing more. Nothing magical. Just a small statistical advantage repeated over many trades. Think about a casino. A casino does not know the outcome of the next spin of the roulette wheel. It does not know whether the next hand of blackjack will win or lose. But the casino does not need to know because it understands something powerful. The edge exists over many events, not a single one. If you walk into a casino and play one game, you might win. If you play 10 games, you might still win. But if you play thousands of games, the probabilities begin to reveal themselves. The casino wins, not because it predicts each outcome, but because it operates within the mathematics of probability. Trading works the same way. Your strategy might only win 55% of the time. That means 45% of your trades will lose. Think about that. Almost half of your trades could fail, and yet you can still be profitable. But only if you accept the randomness of individual outcomes. This is where many traders struggle emotionally, because when they lose a trade, they immediately question everything. They question their analysis, they question their strategy, they question themselves.
Doubt appears quickly, but professional traders understand that doubt is often a reaction to randomness. If a strategy has a proven edge over hundreds of trades, then a losing trade is not a problem. It is simply part of the statistical distribution. The problem appears when traders react emotionally to each individual result. One loss makes them fearful, 2 losses make them cautious, 3 losses make them abandon their strategy completely. Then suddenly the winning trade appears, but they are no longer following their system. They missed it. This cycle repeats endlessly for many traders. They jump from strategy to strategy, indicator to indicator, system to system, always searching for certainty, always believing the next method will finally remove losing trades. But no system can remove uncertainty. No system can eliminate randomness. And the moment traders stop trying to eliminate uncertainty, they begin to operate much more effectively. Because their expectations change. They stop expecting every trade to behave perfectly. They stop expecting the market to reward them immediately. Instead, they think long-term. They think in sequences. They think in probabilities. And this mindset allows them to remain calm even when the market behaves unpredictably. Imagine 2 traders taking the same trade. The first trader believes the trade must work. The second trader understands that anything can happen. The market moves slightly against them. The first trader feels fear. His heart rate increases. He starts watching every tick of the chart. He questions whether his analysis was wrong. The second trader feels none of this panic. Why? Because he already accepted the possibility of loss before entering the trade. He placed the trade knowing that the outcome was uncertain. He already defined his risk. And because the risk was accepted beforehand, the emotional reaction disappears. This is one of the most powerful psychological advantages a trader can develop: pre-acceptance of risk. When risk is accepted before the trade begins, the trader becomes emotionally neutral. And emotional neutrality allows for consistent execution. Without it, traders constantly interfere with their own strategies. They cut winners early. They let losers run. They hesitate when the setup appears. They chase the market after missing moves, all because they are reacting emotionally to uncertainty. But the trader who truly accepts uncertainty becomes much more stable. They execute their plan without hesitation. They respect their stop loss. They allow their winners to reach their targets. They follow their rules consistently. And over time, this consistency allows probability to reveal its power.
Many traders are surprised when they discover how calm professional traders appear. They expect professionals to feel intense excitement during trades. They imagine adrenaline and constant action. But the reality is very different. Professional trading is often quiet, calm, almost boring, because the trader is not emotionally attached to the outcome of individual trades. They understand that the outcome of one trade means very little. What matters is the overall performance across many trades. And this long-term perspective changes everything. It removes emotional pressure. It removes the need to be perfect. It removes the fear of individual losses. Instead, the trader focuses on something much more important: process, execution, consistency, trade after trade, day after day, month after month. And through this repetition, the edge begins to show itself, not dramatically, not suddenly, but gradually, slowly, consistently. And the foundation of this consistency begins with one powerful realization, a realization that many traders resist at first, but eventually must accept. In the market, anything can happen.
There is another side to this truth that many traders never consider. If anything can happen in the market, then it also means something positive. It means the market is not against you. It means losses are not personal. It means the market did not decide to take your money. The market is simply moving according to forces that are far bigger than any individual trader. When you truly understand this, something inside you relaxes, because you stop taking every outcome personally. You stop interpreting a losing trade as a failure. Instead, you begin to see each trade as a neutral event, just another moment in the endless flow of the market. This perspective removes a huge emotional burden that many traders carry without realizing it. They attach their identity to each trade. If the trade wins, they feel smart. If the trade loses, they feel incompetent. Their confidence rises and falls with every outcome. But that emotional roller coaster makes consistent trading impossible. Professional traders detach their identity from individual trades. They know that intelligence is not measured by one outcome. Discipline is measured by how consistently you follow your process. And this is where accepting uncertainty becomes incredibly powerful. Because once you accept that anything can happen, you no longer judge yourself based on the result. You judge yourself based on the execution. Did you follow your rules? Did you respect your risk? Did you enter according to your plan? If the answer is yes, then the trade was successful regardless of the outcome. This idea may feel strange at first. Many traders believe success means making money on every trade. But in reality, success means executing your edge consistently. The money comes later. This shift in perspective is what separates emotional trading from professional trading. The emotional trader reacts to outcomes. The professional trader focuses on behavior, and behavior is something you can control. You cannot control the market. You cannot control where the next candle will go. You cannot control unexpected events. But you can control your decisions. You can control your risk. You can control whether you follow your plan. When traders focus on these controllable elements, their performance improves dramatically because they stop wasting energy on things outside their control. They stop trying to predict every movement. They stop arguing with the chart. Instead, they accept the uncertainty of the market and operate within it. This acceptance creates a powerful sense of mental clarity. Trading becomes simpler. Not easier, but simpler. The trader is no longer overwhelmed by the need to understand everything happening in the market. They only focus on their system, their rules, their risk management, their discipline. And over time, this simplicity becomes a huge advantage because many traders are trapped in complexity. They constantly search for new indicators, new strategies, new secrets. They believe the answer lies somewhere outside themselves.
But the real transformation happens internally. It happens when the trader changes the way they think about the market. Instead of asking, "What will the market do next?" they ask, "Is this setup part of my system?" If the answer is yes, they execute. If the answer is no, they wait. No emotional debate, no hesitation, just calm, disciplined action. This is the mindset that allows traders to operate effectively in an uncertain environment. And uncertainty is not something that will ever disappear from the market. Economic news will surprise traders. Institutions will place large orders. Unexpected events will shift sentiment. Volatility will appear suddenly. All of these things are part of the market's natural behavior. Trying to eliminate them is impossible, but learning to coexist with them is the key to long-term survival. Because when traders finally accept uncertainty, they stop trying to force the market to behave in predictable ways. They adapt, they remain flexible, they remain patient, and most importantly, they remain disciplined. This discipline allows them to stay in the game long enough for their edge to work, and staying in the game is something many traders underestimate. The market rewards those who survive long enough to learn its lessons. Every professional trader has experienced losses. Every professional trader has experienced uncertainty. Every professional trader has watched trades behave in unexpected ways. But the difference is that professionals accept these experiences as part of the journey. They do not fight the nature of the market. They respect it. And that respect becomes a source of strength. Because once you truly accept that anything can happen, you stop fearing uncertainty. You begin to work with it instead of against it. And when that shift happens, trading becomes a completely different experience. Not a battle, not a struggle, but a disciplined process operating within a world of endless possibilities. There is a quiet moment that comes in every trader's journey. It doesn't come with excitement. It doesn't come with a big winning trade. It comes with realization. A realization that the market was never the enemy. For a long time, many traders believe the market is something they must defeat. They think they must outsmart it, predict it, control it. But over time, something becomes clear. The market was never asking you to predict it. It was asking you to respect it. Respect its uncertainty. Respect its unpredictability. Respect the fact that no matter how much experience you gain, the next movement will always contain an element of surprise. And that surprise is not a flaw of the market, it is the nature of it. This is why humility becomes such an important quality for traders. The moment a trader believes they have the market completely figured out, they become vulnerable. Because certainty creates blindness. It makes traders ignore risk. It makes them believe they cannot be wrong. And the market has a way of quickly correcting that belief. But the trader who accepts uncertainty stays grounded. They remain cautious even during winning streaks. They remain disciplined even when confidence grows. Because they understand that every trade exists in the same environment of unpredictability. A winning trade today does not guarantee a winning trade tomorrow. A perfect setup does not guarantee a perfect result, and that is perfectly normal. In fact, this unpredictability is what creates opportunity in the first place. If the market were completely predictable, there would be no advantage. Everyone would know the next move, everyone would take the same position, and the opportunity would disappear. The reason opportunity exists is because the future is uncertain. Different traders interpret the same information in different ways. Some see opportunity to buy, others see opportunity to sell. This constant disagreement creates movement, and that movement creates opportunity. So uncertainty is not something traders should fear. It is the very reason trading exists. Without uncertainty, there would be no profit potential. But for many traders, this understanding takes time to develop. At the beginning of their journey, uncertainty feels uncomfortable. It feels threatening. It creates anxiety, because the human mind naturally seeks control. We like to believe we can predict outcomes. We like to believe that preparation guarantees success. And in many areas of life, preparation does increase certainty. Study for an exam and you improve your chances of passing. Train for a competition and you improve your chances of winning.
But trading is different. Preparation improves your probabilities. It does not eliminate uncertainty. You can prepare perfectly and still experience losing trades. And this is the reality that many traders struggle to accept. They feel that if they did everything correctly, the result should reflect that effort. But the market does not reward effort in that way. It rewards consistency over time. The reward does not come from a single trade. It comes from the accumulation of disciplined actions repeated again and again. And this is why emotional stability is so valuable in trading. Because emotional reactions interfere with consistency. Fear interrupts execution. Greed interferes with patience. Frustration leads to impulsive decisions. But when a trader fully accepts that anything can happen, those emotional reactions lose much of their power. Losses become expected. Unexpected movements become normal. Surprises become part of the process, and the trader remains steady, not because the market is predictable, but because the trader's mindset has adapted to unpredictability. This mindset allows traders to approach the market with calm focus. They observe the charts without emotional pressure. They wait for their setups without impatience. They execute their trades without hesitation. And when the outcome arrives, they accept it without drama. Because the outcome was never guaranteed, it was always one possibility among many. And understanding this simple truth creates one of the greatest psychological advantages a trader can possess: peace of mind. The mind is no longer fighting reality, it is working with it. And when the mind stops fighting uncertainty, clarity appears. Decisions become cleaner, execution becomes smoother, discipline becomes easier to maintain, because the trader is no longer demanding something impossible from the market. They are no longer demanding certainty. They are simply participating in a world where anything can happen.
There is another hidden benefit that appears when a trader truly accepts that anything can happen. It changes how you see time in the market. At the beginning of a trading journey, everything feels urgent. Every candle feels important. Every trade feels like it must work. The trader watches the chart intensely, almost as if staring harder will influence the outcome. Minutes feel long. Small price movements feel dramatic. But this urgency is created by expectation. The trader expects a specific outcome, and when the market hesitates or moves differently, tension begins to grow. However, when you accept that anything can happen, that urgency begins to disappear. You stop expecting the market to move immediately. You stop expecting every setup to perform perfectly, and suddenly, patience becomes easier. Instead of chasing the market, you begin to wait for it. Instead of forcing trades, you become selective. Instead of reacting to every movement, you observe. This patience is one of the most underrated advantages a trader can develop, because the market rewards patience far more than it rewards speed. Many traders lose money not because they lack knowledge, but because they lack patience. They want action, they want movement, they want opportunities constantly. So when the market becomes quiet, they create opportunities that do not really exist. They force trades that are not part of their plan. They enter positions simply to feel involved. But the trader who accepts uncertainty understands something different. They understand that the market does not owe them a trade. Opportunities appear when conditions align, and sometimes those conditions take time. Waiting becomes part of the process. And this waiting is not passive, it is intentional, it is disciplined observation. The trader studies the chart, they watch how price behaves, they allow the market to reveal information slowly. And when the right moment appears, they act with confidence, because their decision is not rushed, it is prepared. This ability to wait separates many successful traders from those who struggle. Impatient traders chase the market. Patient traders allow the market to come to them. And patience becomes much easier when you accept uncertainty, because you are no longer trying to control the timing of the market. You are simply responding to what it offers. Another change happens when traders fully accept this idea. They begin to focus less on predicting the future and more on managing the present. Instead of asking, "What will the market do next?" they ask, "What will I do if the market moves up? What will I do if the market moves down? What will I do if the market moves sideways?" This shift might seem small, but it is incredibly powerful because it replaces prediction with preparation. The trader prepares for multiple possibilities, and when one of those possibilities happens, they already know how to respond. This removes hesitation. It removes panic, because the situation was already considered before the trade began. Prepared traders remain calm during volatility. Unprepared traders react emotionally. And preparation only becomes possible when traders accept that the future cannot be predicted with certainty. Instead of trying to predict the exact outcome, they create a plan for different scenarios. And this planning gives them confidence. Not confidence in the market, but confidence in themselves. Confidence that they will respond correctly regardless of what happens. And that confidence is incredibly valuable because trading requires constant decision-making. Every day presents new situations, new patterns, new conditions, and no trader will ever have perfect knowledge of what comes next. But a trader who understands uncertainty does not need perfect knowledge. They only need a clear process, a set of rules, a disciplined approach to risk, and the willingness to follow that process consistently. Over time, this consistency builds something powerful: trust. Trust in the system, trust in the process, trust in your own discipline. And when that trust becomes strong enough, the emotional turbulence of trading begins to fade. Losses no longer shake your confidence. Winning streaks no longer inflate your ego. You remain balanced, centered, focused on the process rather than the outcome. And this balance allows you to navigate the unpredictable nature of the market with clarity, because you are no longer demanding certainty from an uncertain environment. You have accepted the truth that many traders spend years resisting. In the market, anything can happen. And the moment you truly accept that truth, you stop fearing the market. You start respecting it. There is a final stage that many traders reach after spending enough time in the market. It does not come from reading another book. It does not come from finding another strategy. And it certainly does not come from watching more indicators. It comes from experience, real experience, the kind that only appears after you have watched the market surprise you again and again. At first, those surprises feel frustrating. You take a trade that looks perfect. It fails. You take another trade that looks questionable. It wins. You watch a clean setup fail. Then you watch a messy chart move exactly in the direction you expected. For a long time, this inconsistency feels confusing. You try to make sense of every movement. You search for reasons. You try to explain why the market behaved the way it did. But eventually, something becomes clear. Not everything needs an explanation. The market does not move in a perfectly logical way every second. It moves because of millions of decisions interacting at the same time. And those decisions create outcomes that are sometimes predictable and sometimes completely unexpected. This is the moment where the trader stops fighting uncertainty. Because fighting uncertainty is exhausting. You can spend years trying to eliminate it, trying to predict every move, trying to control every outcome. But the market will always remind you of the same truth. You are participating in an environment where certainty does not exist. And when that realization truly sinks in, a powerful transformation happens. You stop demanding perfection from your strategy. You stop demanding that every analysis must work. You stop expecting the market to reward you immediately. Instead, you begin to approach trading with a much calmer mindset. You take trades because they meet your criteria, not because you are certain they will win. You accept losses because they are part of the process, not because you enjoy them, but because you understand them. You let winning trades develop without interfering, because you know the outcome must be allowed to unfold naturally. And slowly, something interesting begins to happen. Your emotional reactions begin to shrink. The things that once triggered frustration no longer affect you in the same way. A losing trade becomes routine. A sudden market spike becomes normal. Unexpected movement becomes part of the environment. And because these things no longer shock you, you remain stable. Your decisions remain clear. Your execution remains consistent. This emotional stability is incredibly powerful in trading because the market constantly tests your reactions. It tests your patience. It tests your discipline. It tests your ability to stay calm when things do not go as expected. And traders who react emotionally often sabotage their own performance. They interfere with trades. They abandon strategies. They chase the market. They try to recover losses quickly. But the trader who has accepted uncertainty behaves differently. They remain steady. They follow their process. They allow their edge to play out over time. And this patience becomes their greatest advantage. Because trading success is rarely the result of one brilliant decision. It is the result of hundreds of disciplined decisions repeated consistently. Small actions, repeated again and again. Respecting risk, waiting for the right opportunity, executing without hesitation. Accepting the result, and moving forward. This repetition might seem simple, but it is not easy. Because the human mind constantly seeks control. It constantly searches for certainty. It constantly wants reassurance. But trading requires a different mindset. It requires the ability to operate without certainty, to act even when the outcome is unknown, to trust your process even when results fluctuate, to remain disciplined even when emotions appear. This mindset does not develop overnight. It grows through experience, through losses, through mistakes, through reflection. Every trader who eventually becomes consistent has gone through this process. They have felt the frustration of unpredictable markets. They have experienced the temptation to break their rules. They have faced moments where doubt appeared. But over time, they learned something important. They learned that success in trading does not come from predicting the future. It comes from managing uncertainty. And the moment that lesson becomes deeply understood, trading begins to change. The market stops feeling like an opponent. It becomes an environment filled with opportunity, risk, and constant movement. An environment where no single outcome matters very much, because what truly matters is the long series of decisions you make over time. Your discipline, your patience, your emotional control. These qualities are what allow traders to survive and grow in an uncertain environment. And once you begin to think this way, the pressure of trading begins to fade. You are no longer trying to be perfect. You are no longer trying to predict every move. You are simply executing your edge in a world where many outcomes are possible. Some trades will win. Some trades will lose. Some trades will surprise you. And that is perfectly normal, because the market has never promised certainty. It has only offered opportunity. Opportunity for those who are prepared, opportunity for those who respect risk, opportunity for those who can remain disciplined even when the future is unknown. And the traders who eventually succeed are not the ones who try to eliminate uncertainty. They are the ones who accept it completely. They build their strategy around it. They protect themselves from it. and they allow probability to work through it. Because at the end of the day, every candle that forms on the chart carries the same reminder. No matter how strong your analysis may seem, no matter how confident you feel before entering a trade, no matter how clear the setup appears, the market still holds one undeniable truth. In trading, anything can happen.
And that is the lesson many traders spend years trying to understand. The market does not reward those who try to control it. It rewards those who respect its uncertainty. Every chart, every candle, every trade carries the same message. You are not here to predict the future with certainty. You are here to manage risk, follow your process, and allow probability to play out over time. When you stop demanding certainty from the market, you finally begin to trade with clarity. Your decisions become calmer, your discipline becomes stronger, and your focus shifts from outcomes to execution. Because in the end, trading is not about being right every time. It is about being consistent over time. So next time you enter a trade, remember this simple truth. Anything can happen, so protect your risk, follow your plan, and let probability do the work.